one could argue that 23 itself was a year of macroeconomic uncertainty and complexity. Certainly, that started this past year. One could argue maybe in 22, we saw the beginnings of it. So, what I look to in Xero's business that gives me a lot of encouragement is the fact that we're a fundamental tool for companies and their small business advisors to manage their cash and manage their business more tightly. And that's more needed than ever in times of uncertainty. So I look to our results this past year as speaking to the critical role we play, even in times of macro complexity.
Interesting. What else can we watch out for in terms of deal flow and expansion plans, Sukhinder?
Well, I think when we think about our focus for the coming year, it's as we chat about today to our investors, it's continued focus on cloud adoption. We're still early in the early years of the opportunity available to capture TAM. Number two, I think we have a big opportunity to really drive the levers of growth in our business. When we think about deepening customer engagement and driving ARPU using a variety of capabilities, whether that's product mix, whether that's pricing strategies, whether that's the attach of a lot of our adjacent businesses like payroll. I think we see a story where we are early in exercising these levers for growth. And then lastly, I think the story for us going forward is one in which we balance our ambitions to be a high performing and high growth SaaS company globally with our desire to drive increasing operating leverage and profitability.
Oh, absolutely. And as we speak, is that right? Is that happening right now? Is the stock reacting? I don't know. Let's bring up the minute by minute chart. But Sukhinder, obviously your stock has done really well, right? And we're seeing that spike. It's an 8.5% move right now, 31% done. Do you think that as you focus on profitability, that you can look at a challenging demand environment and yet ensure profitable growth aside of just cost cuts? Because a lot of that comes in from cost management. So I'm thinking about what would be your winning formula in this sort of a challenging macro environment where obviously demand is being challenged, pricing is being challenged for a lot of tech firms. And so they're looking at the operating level performance and saying, okay, let's cut back on costs, all kinds of costs.
Well, as you know, I mean, focusing solely on costs misses the bigger opportunity, which is to drive more loyalty and support among your customers. And when you think about, what are the levers that become very important if you want to drive more profitable growth and not just look to the bottom line of expenses, you're really thinking about how do you drive that attach? How do you drive more effective pricing and bundling strategies? How do you give your customers more value in that classic LTV to CAC formula? And I think that's the way you grow both loyalty and a great business.